The live price of SMX Security Matters plc is currently sitting at $1.16 as of the market close on Wednesday, May 6, 2026. This comes after a volatile intraday session where the stock saw a high of $1.47 and a low of $1.02. If you are watching the ticker right now, you are seeing a company that has been pushed into the absolute corner of the exchange, fighting a massive downward trend that has wiped out nearly all its value over the last year. Most people looking at their Interactive Brokers trading screens see a penny stock on the verge of disappearing, but what you likely did not anticipate is the sheer volume of institutional activity that has quietly begun to tick up in the background. While the headline price suggests a total collapse, the reality of the submolecular marking technology SMX owns is currently being tested in massive supply chain sectors that have nothing to do with the retail sentiment currently crushing the stock. The general belief around SMX is that it is a failed experiment in the ESG and blockchain space. Investors often group it with other speculative tech plays that promised a lot during the stock frenzy and delivered very little. You might hear people on investing sites suggesting that it is just another dead-end ticker destined for delisting. However, if we look past that expectation, the reality is that the company just introduced a new method for real-time authentication in the oil and gas supply chain. This is not just another press release, it is an attempt to solve a multi-billion-dollar fraud problem in raw material transit. When expectations are this low, even a single successful pilot with a major petrochemical player creates a massive imbalance between what the market expects and what actually happens on the ground. Recent movement in SMX has been dominated by extreme volatility and the constant threat of further reverse stock splits. Just a few weeks ago, management hinted at additional splits to maintain compliance, which usually sends retail investors running for the hills. On platforms like Robinhood or through a Fidelity brokerage account, you can see the massive gap between the 52-week high, which was once adjusted to over $20,000 due to splits, and the current $1.16 price. This tells a story of a company that has structurally struggled to keep its head above water. However, the trading volumes we are seeing lately, hitting over 6 million shares in a single session, suggest that this is not just a quiet fade into obscurity. There is a battle happening between short sellers who think it's going to zero and speculative buyers who are using the Fidelity mobile app or Interactive Brokers platform to bet on a sudden liquidity squeeze. Institutional activity has been sparse but telling. When you see entities like HRT Financial or Geode Capital Management holding even small positions, it indicates that the algorithmic side of the market is still finding value in the volatility. This is not like looking at Nvidia stock or Apple stock, where the movements are governed by global macro trends and massive earning speeds. SMX is a microcap play where the tension is built entirely on whether the company can stay listed long enough to monetize its patents. The sector momentum for traceability is actually growing, especially with new regulations regarding recycled plastics and Made in America labeling, yet SMX has not yet captured that tailwind in its share price. This creates a fascinating reality where the company's tech is becoming more relevant as its stock price becomes less so. If you look at the macroeconomic pressures, the high interest rate environment has been a nightmare for companies like SMX that rely on future growth rather than current cash flow. While a self-investing strategy through an individual brokerage might lead some to find these low prices attractive, the risk profile here is off the charts. The company's net income fell significantly last year, showing a widening loss despite their efforts to scale. This is the part of the analysis where we have to be clear. The business model is solid in theory, but struggling in execution. They use a chemical marker system that acts as a hidden barcode inside physical materials, which a reader then connects to a blockchain. It is high-tech, it is proprietary, and it is expensive to implement. For those using SoFi Invest or exploring online investing options, the question is always about the catalyst. What changes the narrative? Comment below how many shares of SMX you currently hold, or if you think the recent focus on oil and gas tracking is enough to save the company from another split. Driving engagement around these small-cap tickers is vital, because the retail sentiment often acts as the primary mover when news drops. We've seen this with other stocks on the Robinhood app, where a sudden burst of social media interest combined with a small market cap leads to triple-digit gains in a single afternoon. That is the expectation many hold, but the reality is often much slower and more painful as the company burns through its remaining cash. Looking at the business model more closely, SMX operates as a B2B white-label technology provider. They aren't selling to you or me, they are selling to the manufacturers of gold, luxury goods, and industrial plastics. Their True Gold consortium is an example of this, where they try to verify the provenance of gold from the mine to the vault. It is a noble goal in an industry rife with ethical concerns, but the market currently cares more about the balance sheet than the mission statement. When you compare this to the stability of a Fidelity trading platform or the diversified nature of Fidelity ETFs, SMX feels like a high-stakes gamble. It is the kind of stock that requires constant monitoring, something the SoFi trading platform or Interactive Brokers fee structures are built to handle for active traders. The future outlook for SMX is a binary outcome. There is very little middle ground here. One scenario is that their recent expansion into the US industrial market provides the revenue baseline they need to stop the dilutive spirals. If they can secure a contract that moves them from pilot phase to production phase with a Fortune 500 company, the reality of their valuation will have to be completely rewritten. On the other hand, the risk of a delisting notice is a constant shadow. If the stock cannot maintain its minimum bid price, the management will be forced into the very reverse splits they mentioned in April. This tension between the potential for a tech breakthrough and the reality of financial distress is what keeps the volume high and the price low. To wrap this up, the central insight here is that SMX is currently priced for failure. The market narrative has written it off as a casualty of the post-SPAC era, but the underlying technology for material traceability is actually its most relevant phase. We see a massive contrast between the expectations of a total wipeout and the reality of a company still actively launching new industrial applications. Whether you are using a SoFi robo-advisor for your main portfolio or an individual broker for high-risk plays, SMX represents the extreme end of the speculation spectrum. The authority in this trade comes from recognizing that the stock price and the technology are currently moving in opposite directions. It is a dangerous game, but for those who understand the storytelling of the market, the tension is exactly what makes it worth watching. In the end, you have to decide if the material efficiency and traceability SMX provides is a necessity for the future global economy, or just a luxury that companies aren't ready to pay for yet. The expectation is that they will run out of time, but the reality of their patent portfolio suggests they have assets that someone, somewhere, will eventually want to own. Whether that happens under the SMX ticker or through an acquisition is the real question that remains. Monitor the volume, watch the split announcements, and keep a close eye on those oil and gas pilot results. That is where the next chapter of the story will be written, and it is likely to be just as volatile as the one we are seeing today. Authority in the market is not just about picking winners. It is about understanding why the losers are losing, and what, if anything, can change that trajectory. SMX is the ultimate case study in that principle. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.